All right, so let's start. Ooh, 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 okay, cool. Alrighty. So let's look at NASDAQ real quick and Aussie and probably a little bit of Euro. Let's have a little fun. All right, cool. So first off, I want to look at my baby Aussie versus the US dollar. All right, so let's go on the daily time frame and let's actually pay attention to what we got going on here. So here goes nothing. So right now we're near this order block right here. You can make this line a little thick. And we could actually also make this red. So right now we're at the opening price of this order block here. I like that, but I wouldn't be, how do I say this? I like that it's there. And for those who probably are like, oh, this is probably a short or a sell, there's only one reason why I wouldn't short this, simply because this order block is too long. It has so much volume that I would at least want the mean threshold of this candle being met. And of course, above this candle here, there is a gap, and that would be considered in the form of fair value. So just looking at it from those lens and that perspective, right? It is very much possible and very much likely for me, especially to consider price to go up here into this specific PD array. And then if we want to go into more details, we could possibly go up into here, but we're not there yet. For me right now, this is just more of a temporary or a short-term draw on liquidity. So right now I'm just looking for price to reach up into this mean threshold first. And if mean threshold gets disrespected, then we're looking for the buy stops above here. That would be the necessary approach for me to look at this week. So let me just also put this high here. Just have this high noted here. Go down to a 1 hour. Let me see this real quick. All right, so we're in a 1 hour. All right, so we just keep breaking structure. We have been breaking structure, just going higher, 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 higher. We keep breaking highs, making new highs. Order flow is pretty clear here. We keep respecting bullish things like bullish order blocks, things like that. So the fact that we are doing that, it kind of lets you know, well, this is a day here. This is 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day. So for 7 days in a row, we've been respecting, which is in a week, we've been respecting bullish prices. So if we're respecting bullish order blocks or respecting bullish breakers or respecting just bullish fair value gaps, bullish things overall, I'm going to be looking for a continuation. I'm not going to fight against the grain. I'm going to look for the draw on liquidity higher until I am proven otherwise. But for now, it seems like the draw on liquidity, like I said, is these highs here. If you guys can see it, these are kind of like equal highs, or you could even consider as a original consolidation. Due to the fact that this is the 1 hour, this consolidation is very compressed on this time frame. But if you got to a 15-minute or a 5-minute time frame, this would be a lot more tangible for us to work with. And I'll show you right now. Cool. So if I were to zoom in a little bit, you guys could see this is an original consolidation here, no? So is that a potential area for liquidity for us to reach as a target? Absolutely. Why not? So the fact is that though, on the 1 hour, it doesn't really, you don't really get that type of vibe off of it. But just know that when you go down to the smaller time frames, due to the 1 hour being so compressed, this is actually a lot of volume on the smaller time frame. So this right here is of my interest here for liquidity. That's one right there. And then of course we already rated this high here, and we've been staying above that. On Friday, we came from this gap right here, or this fair value gap. It was obviously in discount.
Hi and welcome back to a new video. This is going to be
Let me see. Where's the Jeansboro? Oh, there we go. I was like, what the fuck? All right, cool. So we came from this fair value gap here in discount. If you possibly put on your OTE, so I just kind of reset my settings and all those stuff. So I gotta do this real quick right in front of you guys. It's a little annoying, but it must be done. So let's just do 62. I'm not gonna even bother putting on the 70 and the 79 sweet spot. So I just keep it very simple and clean. Cool. And I will say that this is the well, we could just put OT. This would be 0.62, and this would be here OTE. And there we go. And let's make the color real quick. My fault. My fault. I'm not responsible enough to do this before the call, but it's okay. All right. So when you're looking at from discount to premium, when you're looking at specifically fair valuation, which is just choosing between well, evaluating the dealing range. When you're evaluating a dealing range and you want to know if it's in premium or discount, you're always going to use the wicks. Use the entire range. When you're looking for entries, use the bodies. Okay. If you're going to look for entries, you use the bodies. If you're looking at the dealing range and you're looking for premium and discount and equilibrium, you use the entire range. So we had here price coming into this order block, and we literally punched in so heavy into this order block that we went above the mean threshold there. And even though we had this aggressive selling from this point here, we also have to just take into the account that we closed above that level. So that lets us know that, hey, this is potentially will and can change the change of state. And the fact that we've been breaking market structure, just been going above and above and closing above, and we've been breaking out to the upside, it just lets you know that, again, order flow is bullish. We've been respecting bullish things. So let's just continue with the flow of things and let's not go against it, because when you go against it, that's when you're likely to lose the most. So the biggest thing I want to note here is that from this low to this high here, we have a range, and this was the previous day's low with the previous day's high. And then price comes down into this fair value gap here with this bullish order block. And yes, these wicks are not so friendly, right? If you had your stop loss right here, right at this low right here, you would have got stopped out, right? But pay attention to the bodies. If we were to take off the wicks, and let's see if we could actually do that. Oh, whoa. Okay, cool. Wicks. This would be the bar down. Well, I don't think we could take it off, but you guys get the idea though. The bodies are closing inside of this gap here. So this is kind of telling you a story. It's literally giving you the key to success. It's telling you, hey, look at me. I am closing inside of this fair value gap. What is this necessarily? We have 1, 2, 3, 4 candles that have closing opening prices inside of here. This is a form of accumulation. This wick right here, that's all manipulation to squeeze out those who already been long here. Simple, right? Because the reason why they're squeezing them out is because they probably put their stop side break even and they're trailing their stop loss. So what happens? They get killed. Go ahead, Ayana. Go ahead.
Thank you. I have a quick question. So with the volatility right now, and you said the wicks are crazy, would you recommend just operating like closing trades based off of closed candles? Or if a wick hits your stop, then you're like out of there?
Yeah, so of me, I've actually the last couple of months, I've actually been training my eyes to just pay attention to closing prices of candles. And yes, because it is absolutely the truth in the markets. It lets you know everything you have to know. It tells you the story. So the fact that we're actually closing inside of this here on the hourly, which is the higher time frame, right? Of course, if you go down to a 15-minute, you're gonna have closing candles here, right? But the fact is that this is an hourly fair value gap, so you got to pay attention to the hourly candles, and you have to wait till the hourly candles close inside of that fair value gap. Now, if this hourly fair value gap gets closed by we take then this candle, let's just suppose that it closed below this fair value gap on this hourly time frame, and it pertains to the hourly fair value gap, right? You kind of see where I'm going, the synchrony with the time frame, right? Because we're using a 1 hour PD array. So let's look at the 1 hour candles and see the closing prices for the 1 hour bodies of the candles. That is authority within itself. So the fact is, on the 5 minute, like I could show you guys, you're gonna have these we're gonna go out to that right here. Look, these candles on the 5 minute, and again, this imbalances gap does not pertain, it does not pertain to the 1 hour time frame. So you shouldn't be evaluating this 1 hour PD array on a 5 minute. Yes, it's a key level, it's a higher time frame level, of course. But the way you evaluate this is on the 1 hour. If you have the 1 hour candles closing inside of a 1 hour fair value gap, that lets you know, hey, they're just accumulating. And all of this is manipulation. You see it here. All of this is manipulation here. And then when price, obviously, because this would be like a closing price. So let's look at it real quick. So when it comes back to 22, right? So we have 21. 21 opens inside of the gap. Inside of the fair value gap right here, boom. And the previous hours before that, it closes back inside of here. So all of this is the wick right here. If you're looking at it from a conceptual standpoint, this is all the wick. This is where they closed. So this means that the candles close inside of this fair value gap again. So then we open up here. So 21, the next hour comes in at 22. Again, we have this candle closing back inside of here. So all of this is a wick. So the bodies are closing in here of inside of this fair value gap. So what does that mean? All of this is manipulation. And where you should be really paying attention to is focusing on is when we get back above this fair value gap on these smaller time frames, when is it good for me to buy it again? Or you would say, when is it the time for me to get in, right? Because obviously we see that price is manipulating. I don't want to get in the manipulation. Well, of course you don't. Why would you want to get inside of a manipulation? You're about to get fucked over. I don't see the whole point in that, right? But we have here the next candle opening 22. I want you guys to notice something very special about this. Once we keep playing around, we have candles opening inside of it and closing back inside. Yes, they go below, but they're closing back inside, right? The hourly candles are closing back inside. Now we got this new candle 22 opening up here, and we validate this order block here. How do we validate this order block? We closed above the opening price of this order block right here. And that right there is the opening price. Just put it out there. And then we have what? We're still in discount. So we're actually below OTE. We're in deep discount. And we understand that price is bullish. We have things here like this. This right here is the New York session. So we have the original consolidation, which is a New York session. And above that, what do we have? Buy stops, right? We have buy stops above this right here, which is the London session. So we're looking at that. So let me just back up real quick. I just want to back up so you guys could pay attention to it. And then in here, we're working back inside of within the Asian range here, right? So the fact that we come back above and we break above this order block here that was created in Asia, which is the lowest down close candle. When we go back above here and then we break the structure here, this is just screaming at your face. Yo, we're bullish, right? And so then price has an aggressive repricing and we go higher. And this was actually late in the day. This was actually towards coming into Asia. This price action here. All this here. Then of course we have this here, but I don't even think this is at a 0. Let me go to, is this even 0? Oh no, this is the average daily range start. Yeah, so this wouldn't even be 0. Okay, cool. That was still right. It's not of that. So now that we have the 1 hour, cool. We just went over what happened on Friday. Now we have the previous, I'm pretty sure this is Friday, right? Friday, Thursday, Wednesday, Tuesday, Monday. We took out the previous week's high. Ooh, what does that mean for my people who watch my YouTube video? That possibly means that we're going to anticipate a reversal, but normally I would anticipate a reversal when we're coming into it early Monday, but the problem is, this is the thing. We're actually still on Sunday, so it's still Sunday's price action, 10:43. But the thing is, though, we have, like I said, we have this liquidity up here, and this is where I'm going to ignore. I mean, an order flow is obviously showing that it's bullish, so I'm gonna stop paying attention to any idea that is for shorts. It just helps me that way filter out the garbage that's probably in my head, and I'm trying to convince myself that there's possibly, and yeah, of course, if you're looking for shorts, you could find them all day, right? You could find anything in hindsight. But I'm just paying attention to trying to stay with the flow of the things right now, which is, it's bullish for me. It's bullish. So I'm looking at this high right here, this liquidity, and this what am I talking about? Fair value gap, and as well as this opening price right here for this order block right here. This is my focus right here. So I'm narrowing my attention to this. So instead of looking for shorts and reasons to sell, I don't care to, unless I'm proven otherwise, right? So if we have a breaking structure and price goes lower, then yeah, sure, I'm looking for that. So we took out this previous week's high, and now below this, is there anywhere where price is inefficiently delivered for me? So what I'm going to do is, now that we took these highs here, I'm going to refer to all the imbalances in this leg prior to this breakout structure and this sweep on liquidity. So I'm going to look here. The one that's finally jumping at me, the first one to jump at me is this one. This one is the lowest gap here. Aside from that, let's zoom in a little bit. That way we could actually see more. We have a gap in here. All right. We could do that one. We have a gap here. So before I go ahead and draw those that are higher, right, we're going to look. This is our current dealing range. I'm looking at all gaps below 50%. And we have this gap right here and this gap right here. Because if you buy it in this gap, I'm not saying that you can. If you find reasons to buy this, go at it. Go ham with it. I just personally, this is how I filter out my setups. I don't buy in premium. No, that's a big no-no. Like, and yes, there may be an order block. Yes, there may be a fair value gap, but you have to respect the fact that we are in premium, because this alone can be the same reason why you save 2%, 3%, or however much you risk on a trade setup, right? This could be the reason why you save yourself a headache, because once you buy in premium once and it works out for you perfectly, what's going to happen? It becomes a habit. So your basal ganglia, which is actually the muscle in your brain that actually creates habits, your brain cannot tell the difference between a good habit nor a bad habit. So once you do something and you get a reward for it, it automatically becomes a habit, because you executed, you did something, what do you get? You get the reward of feeling right, and then you also get the reward of monetary value, which is profits, right? So then you continue to do those things because before it worked, you believe it's always going to work again. So I always make that concrete, I give a friendly reminder that you should not do things, not even once, because it will lead to bad actions if you just let it creep in and then you just continue to do it without realizing what you're doing. So if you ever get in here, there must be extra qualifications for you to get in here that makes this okay, right? And then you could be like, okay, I'm willing to do it. And the fact that I am buying in premium, let me lower down my risk because it's not an A+ setup. So therefore, you're actually being aware that it's not supposed to go in your favor, but you do see a lot of confirmations. So you just want to get in, you lower the risk, and that's fine. But don't treat it like it's an A+ setup because it's really not. So don't ever buy in premium. So first thing I'm looking at is, okay, we have imbalances below equilibrium. These right here is what I'm focusing on. And then we have what? Ooh, we have here an order block. So this could be one of those things where we'll have the bodies close inside the fair value gap, but we'll have price wick inside of this order block and then come back and close inside of this fair value gap. And this would be like ultra precision. This would be lit, right? And I'm also going to say this as well. I will, if price closes below this order block here, if we close below it, then I'm probably not going to be looking at bullish prices anymore, right? Because we are at a daily order block. So if we come and we close below this, then, you know, we might have to reconsider bullish pricing and probably sit on our hands and wait to see more information. But the biggest thing is here, though, is if we do close below here, but we're closing inside of the mean threshold of this order block in here, but we have price coming and wicking here and actually just going for the stop hunt, the liquidity that exists here, and then maybe a little bit of this. So let's actually put up a low here. We have this low here, and then we also have this gap in here. So if price wanted to, it could also run out the liquidity that's below here and here, close back inside this range, and then continue higher. That is a possibility as well. That would be the last thing that price I would be considering price to do, but it could happen. That's just a possibility that, hey, it's there. It's just a reminder. Hold on, guys. I'm trying to get this color change. I hate that dark gray. When you yeah, there we go. Finally. All right. So cool. Actually, I could actually also change this here. Where is it? I can't find it. Oh, nope, nope, nope. Oh, there we go. No, not like pink. We're gonna go gray. There we go. All right, cool. So the fact that we have this right here, these lows right here, price could come here and wick, but close back inside this range, inside of this dealing range. So for me, it's still possible for price to do that and still be bullish, right? But the fact that we've already hit it once here, we've already rebalanced this fair value gap here, and then we came here, I think that there's not really much of a need for price to do that. And I'd rather them leave this liquidity for later on, for just building sentiment. And then later on, they could actually just target this low resistance liquidity run and make it a good objective for later on. This way they just hedge longs, and then they have reasons to hedge shorts. Just like they left this one behind, they'll leave this behind. Just take that out. So yeah, so I'm looking at this though. I'm looking at either this gap in here or we're looking for this one in here, right? Either or, they're perfect, right? Why are they perfect? Because they're below equilibrium. And it would be good for us because they would be squeezing all those who are chasing price inside of this leg here, and they're actually just taking it to deep discount, and you're buying it at a discount, a discounted price. So it's good for you, no? So good for us. So this is definitely what I'm looking at. I'm looking at these levels right here. On the 1 hour, we could actually even draw this out as the 1 hour fair value gap in here. And this could be our interest with this order block in here. And that's even better because it would mean that this, hold on, let's go back into here. So this right here is the order block opening price, and then this right here, I'll try to delete this. Yeah, because it was like overlaying with that other small one. Yeah, so now we have this here. And if you actually just take this and then we just go to the equilibrium of, or the consequent encouragement of this fair value gap right here, this could be an area where I'm looking to buy right there. That would be a good area. The 50% of that fair value gap would be actually perfect. And your stops would be resting below here. Right? And then you could potentially do X with this, right? Or whatever you want to do. So that's my interest right now, but the drawn liquidity is higher for me, and I want to see entries form here. This is where your market maker model will begin, your market maker bond model specifically, and it would be your smart money reversal. So let's look for that. Stay ready for that. So NASDAQ, awesome. So this bad girl, she's been going nuts. She's been going crazy, and she's obviously bearish. If anybody tells you otherwise, they are lying to you. Don't listen to their shenanigans. Let's actually get onto this though. We have here this opening price right here. Up. Hold on. So if we're gonna look at this, we have here this opening price. Why is that doing that? Hold on. I don't know why it's being not so friendly. Okay, cool. There we go. So we have this here, this level right here, kind of the same thing as Aussie. This right here becomes a volume imbalance. If you ever see one of my charts, they're always going to be purple. These specific points in the specific PD array. It's just a volume imbalance. And then if you want, we could just duplicate it. So this right here becomes a volume imbalance. We could actually zoom in a little bit. This is a volume imbalance. This order block right here. Why would I not be inclined to sell this order block? Yeah, you could possibly short it. If that's your way to go and do things and perform, go ahead. Do it. But just be cautious that we have a volume imbalance in here above it. So this actually becomes liquidity. So be very mindful of that whenever you're deciding to just sell an order block and it has a fair value gap above it. That's not so smart. But besides that though, we have here a breaker. So we could actually take this candle here. Ugh, this is so ugly. Sorry guys. Let's make this. Well, this meeting will end in 10 minutes. Who cares? Cool. We'll start it up if anything again if it ends, and I'm not done with this analysis or review. So we have this breaker here. Obviously, these candles are higher than this. So this is this closing price here. And we have this closing price here. This here becomes a breaker. This was a stop run on that. So this inside of here is a potential area. Then we have this closing price here of this candle as well. It's just a low, an old low. So I'm also looking at that there. And I want to see what price does around this level. Again, it's a key level. It's not an area where I'm just shooting the gun. No. I go down to the smaller time frames and then we go crazy. So let me see. Sorry, guys. Let me answer some messages. I like your car. LOL. Of course, the Urus. Can you talk about market maker model and how you look for them? Rich, honestly, bro, I would, and I kind of just mention it here and there. But the biggest thing you want to recognize is that I do have a YouTube channel, if you're not aware of that, and I do go ham with the market maker models and stuff. So how to look for them, that's all over there. That's all over the place on my YouTube channel. Can you talk about DXY? Of course. Of course we can. If we're looking for 1 hour imbalances, then dealing range would be based on the 1 hour chart. If we were looking for 1 hour imbalances, then the dealing range would be based on the 1 hour chart. Yes, absolutely. That is the sauce right there. Order block is in 7.5 exactly. Yes. Yes, 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 yes. All right, let's get back to this. So, this right here, we have a volume imbalance above this order block here. So this for me says danger. Do not try to sell into this garbage, even if there's a fair value gap here. We have that there, but it's just the fact is that we have a volume imbalance above it. Just it's not so trustworthy. And we've actually been shorting so heavily with NASDAQ that the market sentiment is extremely bearish. And you have a lot of people just chasing price. So the biggest thing is that, or something that I would look for them to do, like if I were to make the market, right, I would say, well, for the last 2-3 weeks, we've been extremely bearish, right? And we took out previous liquidity, which is fine, right? Ouch, 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 relax. Okay, cool. So we took out this previous liquidity here. Then we have here this volume imbalance, and then above it, we have a little gap, another volume imbalance in here. And then we also have a volume imbalance in between the closing and opening prices here. So this is also an area where price is likely to go. And also here, there would be people who were trailing their stops. So if they possibly got in here, they're trailing their stops and they're putting it above this market structure here. What is above here? Stops. So this is also very possible of price going above this and going inside of here. But I'm going to focus primarily on the closest price action that there is as far as proximity. The dealing range here would be this. It would be this high right here to this low. Where's 50%? Here. So if you're selling into this order block, you're selling it in discount. What did I just say? Don't do that. Don't do that. Do volume imbalances behave the same as fair value gaps? Absolutely. They're a gap, no? A fair value gap is a gap. A volume imbalance is a gap between bodies, right? Opening prices and closing prices. You see this candle here, it closes here. Efficient delivery would say, if we open here, if we close here, we have to open at that same price level. But guess what? We gap up a little bit, and that also is a imbalance. So now that we have this here, now that we have that set in stone, 50% is above, well, premium or high probability shorts will be above 50%. So therefore, I see this getting ran. And if I were to make the market, I want to possibly aggressively reprice above this bearish order block and go into here, and possibly aggressively go above this high if that is the case, right? That could happen, but I'm not going to go so far yet. I need more data for that, but I love how we take out this low here, but we close back inside this range, right? We close back inside this range, so it's kind of letting me know, they don't want to go lower, right? At least not yet. They're not tipping their hands. Or the algorithm hasn't tipped its hand yet. And it's closing back inside this range. So what happens? I just want to look at all previous gaps, imbalances above 50%. And we have it in the form of this volume imbalance here. We have this volume imbalance here. I'm just not going to mark it up simply because we already have this breaker here. So anything in this breaker is a confluence as well. I would possibly be looking at this opening price right here, this order block right there. So this probably for me is an interesting area. Do we respect that last area in there? And that could possibly be an area where price actually goes down from, and we're inside this breaker, as well as it's the opening price of the breaker candle. So there's so much confluences there. So we could actually see price go deep into premium. And honestly, if we actually go into this breaker, I kind of would like them to accumulate more long positions and possibly have like a stop run here above 50% and possibly go above here. That's what I'm visually looking at. Like, if I'm looking, I'm anticipating. So now that we got that down, let's go down to 1 hour, and I'm gonna just make sure that we get rid of all these lines. So let's just place a red line at the 50%. That way we know what we're dealing with. And we could delete this. Oh no. Cool, let me see. Boom. All right, and this right here would just be the volume imbalance on the higher time frame, which was that volume imbalance. There's also a volume imbalance in that daily breaker. Yeah. I did say that as well. But now that we have this right here, we have price running out these stops here, right? We're on the 4 hour. Why are we in the 4 hour? All right, we have price running out these stops here, and then we close back above. We're going back above inside of it here. So then I have to remind myself, well, if this is 50%, where's price likely to go? If this red line here is 50%, where's my drawn liquidity? Look at this. We have an imbalance with a small, a low resistance liquidity run, a lower high than that of this high right here. So price is going to actually tap into this. It's very likely. And then we want to say, well, from where the current range is right now, which would be from here to here, right? This right here would be the range. Where all my, and this way, even though, yes, we already depicted that this is the 50% of the daily time frame, or the daily range, we actually even have more low-hanging fruits and low-hanging objectives if we actually do it this way as well, because we're even using this range here to get a lower objective than that of these that are up here. So that's just a good way to practice low-hanging fruit setups and stuff like that. So I'm gonna go. Thought I already made this a certain way, but I guess it went back to its old ways. Who cares? So I'm not gonna do the same thing and put a red line in here. Actually, why not? It doesn't hurt. Fuck it. And then let's just delete this right there. So this right here is the 50% of the daily. So we could actually make this one possibly a little thicker. Let's make it thicker. That way we actually know that this is the daily 50%, and this is the just 1 hour percent. We actually have less than a minute, so I should actually possibly start this up again for you guys. So let's actually start up again. Let me stop my share. I'm gonna stop the